Hello, everyone. Jesse Webb, TradersPro. Let's get underway here. Start out with current market conditions and go into the some of the stocks that we want to take a look at today. See what's moving. Market conditions remaining mildly bearish. We've ticked down from bullish to mildly bearish as we're starting to retrace off of some of these highs. We still have momentum leading the way down. Breadth and sentiment both have yet to turn any direction. We've got breadth still up to on the upper end of that range. We've got sentiment also to the upper end of that range, and buy-sell ratio, which has moved pretty aggressively down from these extreme levels as of yesterday. We really got a good pop yesterday, and that was entirely expected. We've been expecting, once you start to get buy-sell ratio moving wide apart, it just doesn't stay there. What we never quite know is how long it's going to stay in this positive one state, meaning that we have this area right here, and when we have green above red, that means buy-sell ratio is above 1. The line that's right here, if it's anything less than that, less than 1, then we have a bearish environment. When it's positive 1, we have a bullish environment. But once we get too extreme, it just doesn't last. So now the issue is going to be to determine if we're going to reverse trends or if this is just a pullback into this overall long-term uptrend. Sentiment is also pulling back, and really everything is having a decent retracement right here, which is good, which is expected. That's what we want to see as well. These markets just can't run this long, this fast for this without some kind of a counter trend or some kind of a retracement. So we are on this 1-year time frame for SPY. We're sitting way up above the momentum area here and that breakout zone around that 457, 458 range, and sitting now at some support right here. I'll zoom in on this in just a minute, but this support range has got to hold up. If it doesn't hold up, it's probably going to be a trip back down to that 460 range on S&P 500. And more than likely, even if we had another little move up and then another decent retracement back down and starting to find some support right here, I think in the longer term, that's actually going to set up a little bit better for a more sustainable rally. If the market is going to continue to rally from here, it's got to have a little bit longer base setup after such a long uptrend. So I think we'll see some consolidation in the markets. We saw some pretty aggressive tech selling this last few days. If we look at the Qs, we saw, let's go into the 6-month time frame here, and we're seeing a pretty significant pullback into some support areas now on Qs, right around that 396 range, and we should find some significant support relatively soon, right around this area, even coming back down into just a little bit lower than that. When we're talking about support ranges, those are ranges, they're areas, they're zones. It's never just one exact price point. So anywhere where we've had price activity back in the past, and it starts to create some support around that area. So we'll see if we get any bouncing here off of NASDAQ and creating some support for tech. That really has been the leader. It needed to have a little bit of a retracement, but we also saw in some of those Mag 7 stocks some pretty big selling. We saw Apple, which has moved back down now into new downtrend. It's extreme to the other to the downside. Momentum is now extreme to the downside. We're sitting now at this long-term trend momentum zone, this 236, and a decent retracement off of this move here. If we just highlight this price point, we're right at a 50% retracement of this entire rally that Apple had from these lows to these highs. So we'll see if we get a bounce right there. But that was a pretty aggressive sell-off in Apple for reaching a high, getting a pullback. That's going to move the markets, no question. So the last couple of days in dealing with Apple. But to have that big of a downturn and move it into a downtrend, and now we're at the extreme of that downtrend, that's not real. That's not real. An optimistic perspective of Apple or the market conditions based on this pullback. But that being said, we're still in that range where we could find some support. Now we just want to wait. We just want to wait for some of these stocks. If they're selling off, let them sell off. Let them continue to sell off. Let them prove to us that they're going to find some support again and start to move back up. In the meantime, let's focus on stocks that are doing that. Okay, we don't always have to. It's one of the things to focus on stocks that we know, and this is a pretty common practice for a lot of investors and traders to just stick with what they know. And these stocks, ultimately these stocks are really the bellwethers of the economy. They are set up to do fantastic over the next few years when it comes to AI and just technology as a whole. These are definitely the leaders, but they've had really big run ups. So you can see here what the one last week looks like for most of these 3, 4, 5, 6% to the downside. Even Nvidia pulling back, just some consolidation in the markets right here. Good opportunity to sit tight, to wait it out, or more importantly, look for things that are working. And there's always something that's working nicely. In fact, the update this morning, we looked at MET, really all these stocks. LPG, which is a transportation stock, really leading the group. Most of the new buys in that list today were, not most of them, but there were most of the transportation stocks, I should say, that are in this shipping industry are having big moves today, and that is a trend that's continuing to work. We're starting to see some oil stocks start to move back up again. We saw METC, which is a coal stock, up 9%. Nice breakout confirmation move. I highlighted it in this morning's update. Pre-market, and we'll see if we continue to get follow through on these. If some of these start to fade, we'll see if that's a case of throwing the baby out with the bathwater, so to speak, on some stocks. But this is a rotational trade moving. Obviously it's been working, and there's still demand there and pretty big volume on both of those the last couple of days here as well. Some of the other shipping and tanker stocks, you've got TNK, you've got where was the other one that I saw here? TNK and TK, both of these. I thought there was one. Oh, it's right there. NAT, which is also a shipping stock. Not as strong as some of the others, but still moving in that direction. So interesting stock here. Dell Computer making a nice run. Dell's had a big run up here from September, from 50 to 70, a pretty decent move here in the last little while. Kind of forgot that Dell even exists, but they really have moved more into the business to business, providing computers for businesses, hospitals and things like that, to where they've got those big orders. Not as much consumer driven, although I think they still do have quite a good business. Obviously, they do in that world as well. Just a stock I hadn't been paying attention to, and it came up in the list there. Interesting price setup. So some nice looking stocks. Keeping an eye on that new buy list. Even some of these ones that are a little bit deeper in the rank, to kind of see what some trends are that are happening. We've got C&Q, which is a natural resource stock here as well, and so we may start to see a shift towards that side of the market as we're getting some strength. Let's go into the sectors and see what we've got continuing to move. We're seeing construction really start to come back now. That was that number one rank for the bulk of this rally, and we had a really solid buy-sell ratio on that up. It was 17, 18, 19, and most of these stocks that are in hold now had been in uptrend. So we're seeing pretty significant retracement on construction across the board. And if we pull in some of those stocks, stocks like Beazer, a lot of the home builders, and let me just go back here and pull that in. So Hovanian, downtrends, moving back into that hold. Let's look at some of the charts on some of these and see what they look like, because they have had, chart patterns that have gone straight up. And so even just a pullback now at all is going to be healthy, and it really is not that significant. But now we need to kind of wait it out. Let's wait for some of these to retrace, to find some support, to stabilize, and then reignite that new overall uptrend is ultimately the the setup that we would want to see on these leading sectors. And you're seeing pretty decent sell off on these stocks. Let's go back to a couple of these others that have really been high flyers. DFH had from 22 to 37 in 6 weeks, a pretty good shot and a nice pullback. So these pullbacks should be considered as opportunities, and watching to build out that watch list on IDs that you may want to consider if they go from hold back to buy, or watching to buy at a support area in terms of that 236 on that upper range. Bees are home. Again, very similar price pattern and pulling back for construction. We're seeing aerospace starting to move back up. Let's see what we've got in that sector and which ones are leading. OPXS, yes. Big uptrend. Aerospace defense, don't know entirely what they do. Remember, one of the things you can do is go out here and just quickly take a quick glance at their website. Take a quick look at the corporate website. It might give an idea, sometimes not. In this case, it looks like gear towards maybe military type gear, but it's kind of a fun process to go through and look to see what some of these companies are actually doing, who they're working with, what their products are, and why they may be leading and in a nice overall uptrend. So we know that, moving to defensive type conditions, markets will do that when they start to top out or rotate from one sector to another. So moving from tech over into something else, and we're seeing that move. We're seeing that rotation moving over into some of these defense stocks currently, just based on this sector rotation. We're seeing utilities also working nicely. NRG, this has been a nice stock that's been moving up just real consistently, and there's been a handful of these that have been working really nicely in this utility space. Keep an eye on those. Keep an eye on these upper ranked stocks, leading sectors. Those are the places to be picking your trades from, are the leading sectors, the ones that are working, the ones that are continuing to move, and just staying away from the ones that are starting to retrace and collapse, setting stop loss, selling out on some of those stocks that are winners, or rather losers. I mentioned yesterday that one of the processes in managing a portfolio is when you get a market that starts to top. Now, again, in terms of how do we know the market is topping? Well, we obviously know that it was really strong in that overall uptrend. We also know that when we utilize the buy-sell ratio, that when that starts to get extreme, we know that it's advanced into that overall uptrend, and it's probably coming to an end. The uptrend may not be coming to an end, but it may be working on a retracement, and this has been the case once again here with that buy-sell ratio. So when things start to get wide like that, that's the area to start to manage the portfolio in terms of am I going to sell? What am I going to sell and why? Let's just jump over that really quickly into the new buy daily portfolio, because we had a handful of stocks get stopped out. We've had a handful of just downtrending stocks, some that just had sell signals. So I think I've sold out of another 3 or 4. Let's just take a look here on dates. So we had SYM, LFMD. Actually, LFMD had a pretty big gap lower. CLBT just retraced. We never really got a decent move out of that. UEC also had a sell signal, and so we've closed out those positions, added in a couple of new positions here as well. GAS and URGN. I think I had one other. TAST. The last few, we'll look at some of these that are continuing to work, but that cash level is starting to accumulate. And again, this is that natural process of market tops, to where we're rebalancing the big winners, we're selling the ones that are losing, we're holding on to the ones that are working, and it creates just kind of this transitionary period between trends and counter trends, between bullish trends and a bearish trend potentially, because each bull market, each rally is going to have different leadership each time. And so we want to try and participate as much in the current leadership as possible, and getting rid of the ones that had been working. They may retrace and then continue higher. For example, a lot of the Bitcoin mining stocks that had these big run-ups are retracing. A lot of them have actually moved out of the out of the muscle stock group because they've gone back to hold. The muscle stock group is only going to have stocks that are showing buys, and a lot of those stocks just really got beat up. Let's say, for example, IREN. IREN was one that we looked at and actually traded, and as it rallied from here, we were able to take some of the gains by rebalancing into this rally, and it's just really sold off, aggressively sold off. I would still keep an eye on these. You've got Bitcoin, which has had a big run up. These are going to move directly in correlation with what. Let me get our IoT. With what Bitcoin is doing. And so you're seeing a lot of these stocks just have these run-ups, big, deep retracements. They may start to find some support at this level and ultimately continue this rally if Bitcoin continues. If not, this was a really sharp, quick trade. Who knows if it's going to repeat itself again in these same stocks. But that's not what we're interested. We're not interested in trying to figure out what is the next thing, which ones are going to move, but which ones are actually moving now. So if these start to rally again and start to show some support, there may be opportunities in these as they're pulling back. Many of them inside of a 50% to 618 retracement zone, 50% retracement here. 5% up. So you're seeing bounces. And if the demand is still here, you're going to see all of these stocks just take off again. MARA, which has been one of the biggest winners, deep retracement, 382, not even almost a 50% retracement, but this is actually good. We want to see this. We know that when we get these parabolic moves and they start to move like this, they're just unsustainable and they're going to have a pullback. So whether or not you want to try and ride out some of that pullback, in a lot of cases we do. In some of these cases we were stopped out, and allows us to raise some cash, allows us to move into something that may be working a little bit more. But if you're looking for, lots of volatility and potential for real big moves, this, keep your eye on that top group. So this one, if this one holds a buy signal, this will move back into that new buy list today. But as of now, or back into the muscle stock group, but it has to maintain a buy signal. Otherwise, it gets dropped out. So if you want to keep your eye on some of those, you can still create your own scan and create a screen that is, I think I just recently deleted mine, but you would go, for example, you could just simply say, I want all stocks that are $3, volumes high, and I want anything that's ranked 99 or higher, even 98. Let's go 98 or higher with no signal. Okay. And this is going to pull in all of those stocks no matter what their trend. So you've got AAOI, 100% rank, but it's a hold signal. Okay. So if I looked at that, you could see retracement. It had a big, nice run up, retracement. We were stopped out just below the 236. On the remaining shares, we rebalanced into this a couple of different times because it doubled once, and then we set some stops. I think that was all we had on those was one double, and we're able to, anytime we have that double, we can rebalance that out into cash, but keep your eyes on some of these. So this is going to be the strongest group, and you can creates a nice group to be able to start to look at when you have a 99 or 100 ranked stock and it's back into a hold signal. Sometimes that continues a downtrend, but they're just the real big leaders, and a lot of them are they just have a lot of profit taking, and then you have an opportunity to jump back in something that may be setting up again at a better time. One of the other advantages of some of these stocks moving back to hold, though, is now when they go back into the new buy list, they're going to show up here, and we're going to have an opportunity to get another stab at some of those as they re-enter that new buy list, and as we're entering into those each day, we're able to take advantage of a new trend if a new trend develops in some of those stocks. So a couple ideas there for you in terms of what to look for, how to watch for some of those leading stocks that are retracing, and some of the leading sectors that are working, and being able to keep an eye on some of those ideas that are working. For example, tankers. You're seeing Eli Lilly. You're seeing some of these medical and pharma stocks really have big moves as well. And there's always something working. We just want to be able to try and position ourselves in a way that we capture the gains while we've got them. We keep the winners as long as they're winners. Once they start selling off, we're just not interested at that point. We've got to get rid of them. We don't want to get married to them or have any type of opinion or emotion related to those stocks or those trades. We just are simply we're just simply doing following a system, following a process, and being able to focus on risk-adjusted returns so that we're able to, and by risk-adjusted returns, that simply just means that in this case, we're taking less risk than the S&P 500 because we're not fully invested. We have a large amount in cash. So to have 18% return, risk-adjusted return just since September 1st, where the S&P 500 is only up, I think, 3% since September 1st, then that's what risk-adjusted returns mean. We're taking less risk, and even though even if we were to say, even if we matched the S&P 500 and got 4% with the amount of cash and the number of holdings that were diversified across, we're taking way less risk and getting a little bit better return there as well. So in this case, managing cash and managing the overall performance and the overall return is what we want to be able to do. We want to do that daily, and we're focusing on that each day. I'm going to end on that note. I appreciate everyone's time and effort, and we'll see you next time. Have a fantastic day. Bye now.